Do you think it's worth selling anything at a loss right now?
I think if you can afford to put a tenant in something and you have financing that can roll with it, if it breaks even, it breaks even, but you're looking at a long-term play.
Okay, so you
But it'll
open
just
your
come down
horizon.
to, yeah, but it'll just come down to if you can keep it on that money long enough.
Yeah, I mean, so what would you do to make sure that you could? What are you doing? What are you doing on Thursday?
Meeting with another bank.
For
try
what?
to try to refinance my apartments out in Longview.
Yeah.
Get ahead of that before they keep going up, before they start pumping the brakes.
Before banks quit lending.
Mm-hmm.
That's the biggest worry that I have in our business. What we're going to do to mitigate that moving forward is we're going to take our private money, the people that we have private money with right now, and we're going to switch them over to probably 90 to 85% owners. Going to switch it over to a fund of sorts and give them ownership to where whenever we buy a property, all three of our exits are on the table, but we're not burdened by debt. One, it's going to clean up our books for what we're trying to do in our refinances, because we're not going to be sitting here holding $4 million in debt that's idle. Okay. Idle debt that doesn't have a tenant that's paying that debt for you. By idle debt, I mean something like a flip, something like a hotel, something that doesn't have any cash flow coming in. So having $4 million worth of idle debt on your books right now, it's came up, even though it's in a separate company. When they look at your global assets, they look over here, and that company has made more than enough money to service that debt. They still don't care. They see the idle debt, and they're like, what is all this? It makes banks nervous. So to get that debt off, we're going to start a fund, switch the private money over to where they have equity now. Some of them will want to do it, some of them won't, and that's okay. You know what I mean? Like we can't stay in this environment. We have to shift what we're doing to where it's what's in our best interest, which means that we will refinance everybody out right now, all the private money. But the next round, when we deploy it, you're gonna have to take ownership with us. We're going to be partners. We'll deploy that money. We will try to sell it. We will try to owner finance it. And if it doesn't go, we will rent it out just like we always do. And we'll pay quarterly dividends. And we'll just turn our entire business into a fund, essentially. But we won't be burdened by debt. We won't be taxed and held back in our own refinances in this model. And the other thing is that if, say, next summer or next spring, they start lowering interest rates back down because they don't like that we're in a recession, and properties appreciate and they explode again, they go back up to 2022 values or spring 2022 values, the private money people, I mean, they'll see some weird return. I don't know what it'll look like. What do you like the way that we buy? I mean, like look at a property that $5,000 mobile home in Granbury that's now selling for 42. Mm-hmm. But if it was in yesterday's market, it would have sold for 110. I mean, if you're invested into that and you own 85 or 90% of it, like, I mean, how does that return look on paper?
Looks pretty. It's a big jump.
It's a big jump. It's massive. But in the intern, it's a longer horizon. If we have to rent that out for a year and a half or 2 years, one, we're not pressed to refinance it. Two, we're not pressed to sell it in a market that it isn't best to sell it in. We can ride it out for 2, 3, 4, 5 years, whatever it takes.
How hard is that to replace? Something like that, a $5,000 mobile home. It's like,
dude, yeah.
Won't find a whole bunch of them.
And for 15, that thing would have been fancy. And the reason why we sold it as soon as it went vacant, the only reason we sold it is we wanted to test the bottom of the market. I wanted to take a $150,000 mobile home, list it for 45, and see what happens. That was it. And when we bought it under real weird circumstances. Some people were like, why would somebody sell it for nothing? Well, the reason why was because it had a bunch of title issues. We had to go solve those title issues. So we just stroked the dude a check and went and solved the title issues. Once we got title issues solved, now we have something that we can sell. I mean, it's a good deal. But even then, we listed it for 45 and we accepted a $42,000 offer. It showed probably 20 times. And keep in mind, this is like a legit 150 neighborhood. This is by the lake. A lot of stuff is sold there. And anyways, showed 20 times, got one offer. Crazy. crazy how the market just disappeared. And people are like, oh no, it hasn't. I'm like, all right, man, I agree.